Good afternoon. Thank you all for joining us on today's program on how companies can use EXIM financing. My name is Melissa Grosso. I'm the director of the U.S. Commercial Service Office in Connecticut. And today's program is part of a month-long series of Manufacturing Month programs. Just a quick reminder, tomorrow we have a webinar on cybersecurity, and I'll be sure to send those details by email if folks are interested in registering for that program. A couple quick housekeeping items. We are recording today's session, and I'll be sending out the recording within 24 hours of today's program. Also, you can type in any questions that you have. Please use the Q&A box that's at the bottom right corner of your screen to enter any questions. And for today's program on EXIM financing, we've crafted today's program as a panel discussion. We've got a great lineup of speakers today, and I think you'll really enjoy our program. Specifically today, you'll hear from, we have Richard Foy from EXIM Bank. Richard is EXIM's regional director for the Northeast. And prior to joining EXIM Bank, Richard was with the International Finance Group, where as VP of Commercial Lending, he provided access to loans by working with various funding sources to meet the needs of his clients. And prior to this, Richard was marketing and underwriting ocean marine cargo insurance, and he has extensive logistics background with over 20 years in the field, holding positions in operations, risk management, quality assurance, and environmental affairs. Thank you very much to Santander, who's our sponsor for today's program. We have two speakers from Santander today. We have Robert Altman, who will be moderating today's program, and Robert leads the Trade and Supply Chain Finance Group for Santander's U.S. Commercial Bank. He's been in this position since 2019. Based in New York, Robert has over a decade of experience in executing transactions in the global banking space. Robert's held positions at HSBC and most recently at Deutsche Bank, where he was vice president of their financial supply chain business. Also from Santander, we have Neven Bonev, who is the vice president of trade and working capital solutions, covering the Mid-Atlantic area for Santander Bank. He also serves as Santander's in-house administrator for EXIM Bank's working capital program. And Neven has 17 years of experience in commercial lending and trade finance. He's also an adjunct faculty at the finance department at Goldie Beacom College. And finally, you'll hear from Lou Auletta, who is the president and CEO of Bauer, Inc. Lou's been with Bauer for 37 years, including 25 years as president and CEO. And Bauer designs and manufactures aircraft test equipment based in Bristol, Connecticut. Lou has been primarily responsible for the company's international sales in nearly 80 countries. So again, a really great lineup of speakers today, and I think you'll really enjoy today's presentation. So I will move the slides out of the way and I will turn things over to Rob. Rob, thank you so much.
Hey, thanks, Melissa, and thanks to everyone who joined today. As mentioned, my name is Rob Altman. I'm the director in Santander's Commercial Bank. I support our supply chain and trade finance efforts. I'd like to welcome everyone here. I think this is going to be a great panel. We're going to be focusing on EXIM Bank's partnership with banks and exporters. And I'd like to take advantage of today's speakers to understand the various perspectives that put parties involved in supporting these EXIM structures, including EXIM themselves, banks that support these structures, and a corporate that uses them. In today's environment, the topics surrounding exports and how companies are managing them is paramount. The last 18 months has led most U.S. companies with a global presence to reevaluate their export business across a variety of fronts, including counterparty risk from a counterparty risk perspective, as well as from a working capital perspective. So I hope today's discussion can give insight into what options exist for exporters, given these strategies or concerns that may have not been at the forefront until recently. And I'm sure many of us are familiar with EXIM, but just quickly as a refresher, EXIM Bank is a small independent government agency. Their mission is to grow and sustain jobs through exports by allowing for companies to shed their financial risks associated with exporting. And this can include their credit insurance program, which allows for exporters to insure customer payment risk, which, leveraging that enables them to sell more from an open account perspective. Their loan guarantee program, which supports lenders who can provide financing to exporters. And then EXIM's medium-term program, which allows exporters to offer competitive multi-year terms on their equipment sales by partnering with a lender that benefits from such guarantees. So with that, I'd like to welcome once again our guest today, Neven Bonev, member of my team, a vice president in our trade finance business for Santander. Richard Foy, EXIM's Regional Director of the Eastern Region, and Lou Auletta, President and CEO of Bauer Inc. So with that, why don't I kick it off here? And, Neven, first question for you. From the banking perspective, how do we view, or how does the bank view EXIM financing, and how does that differ from a traditional line of credit that a corporate may seek to get?
Yes, thanks, Rob, and hi, everyone. EXIM Bank allows partner commercial banks to lend and support exporters by lending on assets that otherwise we wouldn't be able to lend against. Namely, foreign receivables. As you know, one of the main lending assets when a bank meets a company is receivables and inventory. The challenge with foreign receivables is that banks, really American banks, do not have a lien on such receivables. So a government guarantee in place allows us to lend against these assets that otherwise would be ineligible in a normal line of credit. So if you're an exporter and a substantial part of your business is foreign receivables, you do need a program like this to be able to tap into these assets that otherwise would be ineligible. The other part is inventory. Banks do lend on some inventory. However, typically the disbursement rate is 50%. A lot of times work in progress is taken out of the equation just because banks see very little to no value in a semi-assembled widget. And EXIM says it's fine to lend against these assets. And again, the bank, the government guarantee makes the bank more comfortable where you would otherwise have collateral shortfall. So the program is great for companies that have a vast majority of assets that typically wouldn't be eligible, and they can obtain working capital for those assets.
I appreciate that, Nev. That's great insight. I think it's helpful to understand, what is eligible from a traditional perspective, and being able to leverage off of that, or leverage off of maybe what's generally viewed as ineligible, but it has some capacity here. It's certainly helpful. Now, you're speaking specifically from kind of the more of a line of credit perspective. But Rich, I want to go to you because in the intro I mentioned that there's a variety of these structures, and there's the working capital guarantee program, which Neven was refreshing us on. But there's also the insurance program, which may not require a bank line of credit. So helpful for me and for everyone, if you could walk us through what the difference is between the working capital program, but the insurance program as well. Oh, Richard, I think you're on mute.
Rich, you're on mute.
Sorry, I can't follow directions here. So as you said in the intro, the agency is really designed to shed financial risk associated with export so that people are free to exercise on, all these opportunities that come before them. The working capital guarantee, it protects the lender against default by providing a guarantee, ensuring that they will get paid on the loan from EXIM if the borrower defaults. We provide a 90% guarantee, and that's great for the lender. It does very little, though, for the exporter themselves. Obviously, reducing the lender's risk incentivizes them, or is designed to incentivize them to make these loans geared towards export. So on the flip side, you have the exporter that is, in many cases, borrowing from the lender in form of working capital on behalf of their client. So with our credit insurance program, this is designed to protect their loan, essentially, to their client. So it operates in a very similar way. If the foreign buyer defaults or fails to pay an invoice that they've invoiced and we've approved, then we pay the exporter, making them whole and ultimately giving them the ability to pay back the loan. So this helps in both cases, as well as us leveraging their assets in a slightly different way than a traditional line would leverage them, like Neven said.
Thanks, Rich. And Neven, quickly, I want to go back to you because it's you were very clear in going over the differences in these two types of, how a traditional line and an EXIM back program. But is there any effect that they may have? So, if a company has maybe an existing line of credit, a more traditional line of credit, and they're looking for something like a EXIM backed program under the working capital guarantee, does that affect anything, or can they, kind of be structured on top of? Be interested to see what the insight is from the banks on how they look at those in parallel.
Yeah, that's a great question, and it's a question that comes a lot with when you're talking to new prospective EXIM borrowers that haven't done the program before. The question typically is, hey, if I do this EXIM line, do I have to give away my regular working capital facility? Because I certainly don't want to do that. And the answer is absolutely not. They work well together. The EXIM supported line would have a priority lien on the foreign assets and a secondary lien on the domestic assets. So I would say 95% of the time when we do an EXIM facility, we do it in addition to an existing line. So you don't have to give away your domestic facility, the facility you've count that has put you in business and that you count on for your regular working capital. They can work well together.
Well, I think that's helpful to know, because I think in many times when you have people may view these as competing offers, and again, right, when we work with corporates, it's always about seeing if there is a solution that could be a replacement of what they have, but to know that they actually don't compete with each other, I think can be very helpful. We touched on this, and Rich, I want to go back to you. The focus is on exports. I mean, clearly the purpose of these is to focus on companies and supporting U.S. companies that are exporting. But, I wanted the crowd and the audience to understand what's eligible. I mean, are there certain assets or what really kind of fits under a collateral basis for, one, an EXIM-backed working capital program, but also, again, touching base on the insurance program, if there's a, kind of what, potentially the receivables, what's eligible, what's ineligible. I'd like to give some guidance to everyone here, what fits under one of these umbrellas.
Yeah, sure. And touching on your other question too, Neven, I just want to be clear that when you work with a single lender on your loans, whether it's a standard credit facility and then an XM, it's important that they understand what you're doing, because in many cases you'll see lenders throw a blanket lien on things, and that makes it difficult for XM to come into the play, because you kind of have to restructure that initial line. XM focuses on export related collateral, right? So, and can only be used for export sales. So it's important that you have that distinction. To answer your question, what is eligible? We have certain criteria. One, wholly, your product must be 50% or greater U.S. content to be eligible for any of our programs. And that's for the working capital guarantee as well as the credit insurance program. Specifically, on the loan side, what are eligible pieces of collateral? Finished goods, work in progress, raw materials. They can all be advanced at 75% of their value. And comparing that to a facility without XM, banks typically will only advance 50% on finished goods, maybe 20% on raw materials, and work in progress. So that half-baked widget that Neven alluded to, they typically wouldn't advance on that at all. We also allow 90% advance on foreign account receivable, which is big because that's usually on naked, uninsured receivables. The bank won't advance anything. We allow them to advance. So you can see how, with XM, you can really build up your working capital facility. And you see that, like, all right, you have this collateral. We're able to kind of, put it on steroids and really get you that into a working capital facility.
I appreciate that. And I'm going to throw you a curveball here, Rich, and Lou, I want to get to you, but this popped into my head just now. What if, again, you may not be directly exporting. What if you're, the products will end up abroad, but it's going through, an intermediary? Is there any applicability there for a company?
Yeah, we can fully support them. As long as what you're doing will be exported, and you obviously you'll have to document that you're selling it to ABC companies, a company that is putting your product into their export. You can credit insure it as well as have it as part of your working capital guarantee program.
It's helpful to know there's that flexibility there. So I think going to maybe the most important person here, who's not on the kind of the pitching side, right? From the client perspective, from the corporate perspective, Lou, I know you use these programs, but it's great for everyone to hear, what drove you to that point. So what was the driver to put a program like this in place, and how are you leveraging off of these programs right now?
Sure. So the EXIM product we primarily use is the Export Working Capital Loan Guarantee Program. This provides us with access to a line of credit from Santander, where the bank receives a loan guarantee from EXIM, which we use to support our international sales. Bauer is selling capital equipment, and a typical sale for us is in the range of $1 to $2 million. In every situation, we negotiate payment terms with customers. Sometimes terms are more favorable than others, depending on what we may need to do to be competitive. So we might receive 25 or 30% down payment from a customer, but we may not expect to receive another payment until shipment, which may be 10 to 12 months later. So in the meantime, we need working capital to perform on the project. We need to pay for materials and labor. So we can borrow from the bank against the EXIM-backed international line of credit. The bank loans us the money we need for cash flow against export-related assets, inventory, and accounts receivable. So in essence, EXIM increases our borrowing power. In one instance, about 3 years ago, we had an opportunity to compete for a large project worth over $8 million in Turkey, which we won. In addition to the high value of the project, our customer was only willing to provide a 20% down payment with the order, and then not another payment until shipment, which in this case was about 18 months later. So just to compete, we needed to know that the bank and EXIM would support us. And we were able to increase our international line of credit to obtain the working capital we needed for this large project.
I mean, I think that's a good story. I think, from a selfish perspective, we're glad to be the bank that's providing you with that line. So, and so kind of following up when you put this in place, I think when most people think, working with, if it's the US government, they may think it's a bureaucratic process. That they could be slow and tough to put some of this, in place. So what was Bauer's experience, in terms of just getting the program up and running? It'd be good insight for, for listeners who may be thinking about this, but I think they may think to themselves, U.S. government means a long kind of drawn out period. And I want to give them a real actual perspective of an actual client experience here.
Right. So we deal essentially with Santander. Since the bank has delegated authority to authorize EXIM Bank guaranteed transactions, utilizing our international line of credit is just part of our normal banking relationship. Mm-hmm. We've had a great relationship with Santander. They've been very supportive. And from our company's perspective and experience, there's absolutely nothing bureaucratic about it.
So kind of following up on that, back to you, Rich, you're the one that, that the banks are going to come to. So, what is that application process like? How long does it take? If someone's going to come to you, they want a quote, whether it's can you support the working capital program, whether it's getting an insurance quote, what is that process for whether it's the bank or even the corporate if they want some sort of insurance coverage?
Sure. Well, as you know, loan applications are driven by the lender. So obviously, I hope that they try to make it easy for them. Delegated authority goes a long way with the flexibility given to lenders. So for everyone that doesn't fully understand what that means is when a lender has delegated authority, they basically have the pen or the stamp of approval. They underwrite in accordance with EXIM Bank's underwriting criteria. They complete all the documentation and they're able to sign off on it with our guarantee. If you utilizing a bank that doesn't have delegated authority, it does require a secondary underwrite. So the bank you choose would package that and send it on to EXIM Bank underwriters who would review it. That would, of course, delay and maybe complicate the process. We hope not that it doesn't complicate it, but it would certainly delay it slightly. As far as the application process generally, it's as fast as how you can furnish documents. That's usually delays occur because exporters, maybe they are poor with their documentation, they don't have things at their fingertips, so they have to kind of dig it up. So that can delay things. From our side, we look to expedite things and get it done, certainly within 30 days on a loan when it does come into us. On the credit insurance product, that's something that we underwrite. We handle everything in-house. We are the insurance company, so to speak. So that process runs pretty smoothly. We take our applications through Experienced Broker Network. This is designed to provide support to the exporters in a kind of a third-party capacity. They act as your advocate, so they can collect the information. They can kind of work with us to make sure that the terms and everything are set correctly, and they provide support on the back end. A multi-buyer policy would normally take inside 10 days to put in place. On a single buyer policy, where we have to maybe do a little bit more underwriting and research on the foreign buyer, maybe it'll stretch to 3 or 4 weeks.
Right. And you mentioned that you're working with a broker. Would these be the same brokers that any trade credit you would leverage off of for any sort of trade credit insurance policy?
Yeah, so that's a nice thing about working with brokers. And this is a fairly recent, over the last 2 years, we kind of changed to having all of our applications brought in by brokers. EXIM Bank doesn't compete with the private sector. So, we're not, we look to fill gaps, where the private sector can't support an exporter with their program. We look to get plugged in there. And we're happy when people kind of graduate from our program and move back into the private sector. To that end, having an experienced broker that is well versed in all of trade credit insurance, in the field, that gives them the opportunity to regularly reassess these exports and say, you know what, maybe at this point in time, this private policy might better serve you. Like I said, we're fine with that. Our goal is to make sure that exporters don't miss opportunities. We're not here to be a profit center, so to speak. We're here to make sure that your company as an exporter is profitable.
And to Richard's point, I would say I've been here long enough to remember the financial crisis of 2007, 2008. And I remember that a lot of the market was disrupted, obviously, and a lot of the private insurance was not available. And this is when EXIM stepped up big time, because they were able to provide insurance where other for-profit insurance companies simply did not want to do it. So that becomes exponentially more important when you have challenging times. When we've seen that over and over again, and with our facilities as well, that the EXIM program is counter-cyclical. When you're in a strong cycle and banks are competing to lend money, sometimes they're willing to provide these lines of credit on regular terms. We've lost EXIM facilities because a bank came in and said, well, you don't need EXIM, we'll just give you a line of credit, you don't need to do any of this stuff. And then when things get tough, they pull it. So EXIM is a great way to hedge that risk and to provide some stability in tough times.
That's great. That's helpful to hear, Neven, from our perspective as well, from the bank. So I think it's not just EXIM advocating for themselves, but other institutions as well. Just one other question, Rich, I have for you is, given it seems, 10-ish years ago, you kind of, you guys were there, you were nimble on your feet to support companies that may have, had opportunities dry up with the private insurance market. If a company is, let's say a company, reaches out to you on an insurance program and there is they say, hey, I'm going to need X amount, or these are my customers. What if that changes? So what if, are they locked in for a year at that certain policy, or is there an ability for a company to come in and say, hey, actually, sales are increasing. I'd like to be able to alter the policy.
Yeah, that's a great question. I appreciate you asking that, actually, because our program is designed to be nimble, I guess. I mean, the structure of our policy is pay as you go. So you only incur in the case of insurance, you only incur the expense of insurance when you have a sale that is insured. So the month after you've had that sale, you log into our system and you let us know about it, and you pay the premium at that time. So obviously our policies are structured as an annual policy, renewable, but you can cancel it at any time. Move on to another carrier. We can change the policy from a multi-buyer to a single buyer, or vice versa. So we're very flexible. We just, our biggest concern, I'll say, is just being adversely selected against, having somebody else take all the good risks and then them coming to us for the garbage. I mean, we do that in a case of a single buyer policy because I think they're priced appropriately for that risk. But when you have a multi-buyer policy, our policy is designed to be what we call a whole turnover. So that means that we have the expectation that we're going to cover all of your foreign trade credit risk. If they say that they're going to do that and then they start either self-insuring part of it or pushing it off to another policy, that's not really what we're comfortable with. So then we'll try to restructure it to a more fair policy. We don't kick people out for that, but we try to restructure it to what we call a reasonable spread of risk. So it's fair to everyone.
Okay, that's certainly helpful here. And Neven, Lou had touched on this, and I want to bring it back to you in terms of like engagement. So if a company is interested in one of these, and again, I think from the bank perspective, we're talking more maybe on the working capital program. If a company is interested in that, what's the best way of going about that? Is that, and is it going to EXIM? Is it going to you as the representative at the bank? What's the best path forward for a company to engage?
I would say, Richard may have a different opinion, but I would say talk to your bank first. You have an established relationship with a bank. If you already have a domestic facility, talk to your bank first and see if they're a delegated lender or they have a relationship with EXIM, because your chances of obtaining an additional loan from somebody who knows you and has banked you for a while are the best. If your bank cannot support you, then you can certainly reach out to EXIM and they can give you a variety of different banks in your area that do this, and they can certainly connect you with someone who can help you out.
Yes, yeah, Richard. So what's, I guess from your perspective, kind of the same question to you. I mean, do you get inbounds from companies saying, hey, can you help direct me to a financial institution who will take a look at this? I hope the answer is always Neven first, but obviously I'm interested to get your perspective.
Yeah, absolutely. So there's a couple of things. One, we always refer them back to their current banking relationship. I think that's important for all the points that Neven made. They know your business, they want to help you grow, so on. The issue that we have come up with, and continue to, frankly, is their banking relationship, their relationship manager at the branch level is not really aware of their own international capabilities with XM or whatever. So it's important to direct them to the appropriate person within the bank that can take them to the next level. A common thing is SBA. I mean, we work closely with SBA. Now they have a 7A loan, and then they have an export specific loan. The export specific loan is far better for the bank, giving a 90% guarantee than the 7A. But when they go into the branch and they say, I'm exporting, I need working capital, more often than not, they just try to put them into the 7A. And that's hurting their own bank and reducing the ability for the exporter to leverage things the way the export focused loan is designed to do. So what we've done internally is when we have an opportunity, an inbound opportunity like that, we refer it over to our team that works with the lender network. All right. They take all the information, they kind of package it up and have that conversation with Neven, for example, and say, hey, this is a client that you have. This is what they want to do. And they kind of walk it through so that the loan gets done. We've had far more success in this process than in the past, just saying, go back to your lender or your banking relationship and tell them that you're interested in the XM working capital loan. And then we walk away. That was not very successful because they get tied up in, well, I don't know who it is. This is a lot better, and we're able to put them in touch with the exact person.
Right. And so, certainly helpful when you're doing some of that feeding, to the bank network. I mean, Neven, from the bank perspective, and you touched on this in the beginning, but, when talking to a company, how are you able to help them identify them as a good candidate for some sort of EXIM financing program? What do you look for, one from a company perspective, but also kind of how do you kind of position them to think about what type of structure to use?
Yeah. So when you talk to a company and you consider a couple of different things, how savvy is the company? Is the company just getting started? Are they looking to do one export and hopefully more in the future? Do they have a steady stream of export business? What's the size of the company? What type of financial sophistication the company has? And I will say this: the EXIM product is great, but it is an asset-based lending type of product. When you have an asset-based lending type of product, you have to have the financial sophistication internally as a company to produce borrowing bases, reports, and things that a smaller company may find challenging. And it's kind of you don't want to set up a company with a loan or where they would be hard pressed to meet all the different requirements, right? So if you're talking to a smaller company, and this is why it's great to have both the SBA, the Small Business Administration, and EXIM, because SBA has a product called the Export Express. It goes only up to $500,000, so it's much smaller. But it's also less in terms of reporting requirements. So that could be a nice program that may graduate you into eventually EXIM. We just received a question in our Q&A session saying, can I borrow against equipment and get a working capital loan from EXIM? Equipment that I will be using to produce product that will be exported. And the answer is, no, you cannot. However, the SBA has a product called the International Trade Loan that can potentially help you with that. So if you connect with, I'm sure the EXIM and SBA have knowledgeable people to help you with that. A knowledgeable banker can help you as well and say, hey, this may not be the right product for you, but there is another product that would be great where you can borrow against equipment that you will use for exporting and get favorable terms, where you can improve your facility if you plan to export or if you're already exporting and get favorable terms. So there's a number of different programs there that we can certainly help customers navigate through.
I appreciate that. Appreciate you answering on the fly there, Neven, too. Next, this is more of a two-part question, and Rich, I'll go to you, and Lou, I want to come to you afterwards because I think we'd be foolish not to address this given what the world's gone through in the last 18 months. One, for you, Rich, have you observed any change in lender behavior or borrower behavior over the last 18 months? Given the emergence of COVID and the effects that has had on just credits, underlying, credit risk of companies, supply chain issues. Have you noticed anything in particular in companies or banks that are leveraging off of these programs?
Yeah, early on, the uncertainty of the overall economic impact of COVID, I saw that both XM and lenders were very cautious, especially for certain industry sectors that were likely to be hit hard. I saw a hesitance in extending credit for risks related to the airline industry. So, Bauer and restaurants and other similarly positioned businesses that relied on that movement of people. So lenders lean into XM really more during this time as their underwriting became tighter. So same thing with private credit. So private credit companies were also tightening things, looking at risks, and pulling back limits and so on. So this is when XM steps up. We're cautious. We underwrite risks well, but ultimately we want to make sure that people aren't losing opportunity. Not losing opportunity so that we end up footing the bill for these exports. We cautiously underwrite it, and if it makes sense, then we do it. I think millions in deals would have been lost if we had not stepped up during this time. And frankly, so if you look at things, you had a strong credit risk that was in maybe a bad industry, early on. So they're saying, "Oh, geez, is this going to dive down?" All right, it's likely was. Their financials. Now we're at the point where things are reopening or whatever. So you're looking at historic over the last year of financials, saying, "Well, they were pretty weak." So what's the likelihood of them coming back? And the strength in their financials. So underwriting really has their work cut out for them. And we're happy to be here to support them and give that extra boost for lenders and credit insurers to make these deals happen.
Okay. I mean, that's always good to know too, that you kind of stood by. I think we saw, just in general, from a credit perspective, people certainly, I think, were stepping away from risk maybe they weren't comfortable with. Certainly reevaluating portfolios. So, it's a good signal to show to the market that, you're still there and you're still supporting clients when they need it most in these types of in these circumstances. So, Lou, from the client perspective, and again, this may not be as much of a EXIM question or relate, but what has been the impact to Bauer? I mean, how have you been managing through the last 18 months? Again, you have there's supply chain issues. You're an international company. So I think if you can speak to your experience from, not only from the sales side, but procurement as well. Yeah, I think the audience here would certainly appreciate getting your perspective of it.
Right. So first of all, from the sales side, international business has definitely been down significantly. We have been fortunate to have enough military work to stay busy, but we're definitely looking forward to a return to international sales that we were used to pre-pandemic. Besides that, I mean, with regard to just conditions in general, in 2020, we were experiencing delays from customers. In some cases, purchases were postponed. In a few cases, we had projects put on hold. But I would say this year, it's been more a matter of experiencing delays from suppliers and even shipping delays, outgoing shipments. We buy large items such as pumps, motors, and also electronic products, which we build into our equipment. And besides price increases, we've seen deliveries in some cases go from like 6 to 8 weeks to 6 months. So we're trying to plan further ahead. We're seeking alternate suppliers. We're trying to manage the effects on our cash flow, but by not being able to keep all projects moving at the pace we would like. And of course, we're trying to explain to our customers the reason for delays. And like an example with regard to shipping, we had a situation a couple months ago where we were trying to make a large shipment to France. We normally could make a booking on a ship within a couple of weeks, but in this case, after experiencing one schedule change after another, it ended up taking about 2 months to make a booking. And then we experienced a further delay when drivers weren't available to bring containers on trucks to Bristol so we could load the equipment to be taken to the port. So it's been that sort of thing.
But it's I don't think you're alone. I think certainly everyone's experiencing a little bit of this. I mean, at the end, you kind of touched on, obviously delivering things on the port. Again, something we may have reached on earlier, but when you have, if you're getting access to letters of credit, if you have some of your customers issuing you letters of credit, how are you able to take advantage of? I'm going back to EXIM. With your program, how are you able to leverage off of that? And also, how does that, in these types of scenarios, how does that help you kind of preserve cash flow and protect yourself by connecting that with this program?
Right. So it's actually the other way around. This is the application of our EXIM line. We make the most utilization of. So our international customers, when they provide us with advance payments, meaning payments before payments that we would receive before we complete and ship the product, our customers demand protection for these payments. So we have our bank, Santander, issue a letter of credit to our customer, and this guarantees our customer that we'll fulfill our obligations for which they have advanced us money. So let's say we expect to receive a $500,000 advance payment. Without EXIM, for the bank to issue a letter of credit on our behalf, they would require cash from us as collateral. However, with EXIM's backing through the loan guarantee program, we can use our foreign receivables as collateral to support what we need for these letters of credit. So instead of having to utilize our cash for this purpose, we can use it instead to support operations and for business development. This same facility also enables us to establish bid bonds, performance bonds, warranty bonds. On the large Turkey project I mentioned earlier, we needed to establish all of these and over multiple years to meet the customer's requirements. And being able to do so enabled us to not only compete, but to win the project.
So, certainly a significant savings of cash, especially if you don't have to front everything. You're talking, more than half the project value is cash that you get to retain by leveraging off of this type of program.
Yeah, absolutely. It's huge for us.
Yeah. Well, I appreciate that commentary. So, one last question, and this goes back to you, Rich. What could you say are common questions you get, or maybe misunderstandings of these EXIM Bank programs that folks may not normally be aware of?
I think who they're designed to serve. The biggest misunderstanding is that EXIM Bank is only focused on big business, Bank of Boeing and so on. In fact, 90% of our business transactions are for small business, and over 50% of total authorization dollars are allocated to small business transactions. So, while we do those big deals for Boeing, GE, and so on, I view it a little differently. I say, because I know some Congress says we shouldn't support those, but I think the fees from those transactions allow us to continue our mission to support small business with programs that are affordable and flexible, that really speak to the needs of small business being successful in international trade. So, we always say that, small business is our business. And it is. When you look at the numbers of like what we're working on, every day, for the most part, it's small business transactions.
Mm-hmm. Well, that's helpful to know. I think you hit it right in the beginning too. I think people think, like you said, right, Boeing, and 99.9% of the people are going to say, well, we're not We're not Boeing, nor are we close to that from a size perspective. So, to really hit it home that no, we're there to support the smaller companies that may not be able to get the support, that on an independent basis. So certainly I think it's a good point to hammer home.
Yeah, and just to add on to that, it's important to recognize that no deal is too small or too big for us. We don't have a cap on the top side, and at XM, we don't have a low side minimum that really plays in on the credit insurance more than the working capital, because it's got to make sense for a lender, right? So there's certain size limitations there, but they're not XM imposed. On the credit insurance side, though, I deal with a lot of really small companies. Maybe they have a $5,000 order, and we insure it even less because it costs them literally a few dollars to insure that. But when you look at their business, you say, how much, if they lost that $5,000 order, how many more sales would they have to make that up? So when you put it in that perspective, they say, yeah, okay, it's not like, oh, I'm not going to insure this $5,000. Pay the few bucks, insure it, and this way you're not going to get beat on it. It really helps and really makes a difference in these small businesses where these, a good size order is $5,000, $10,000, because getting beat on that could devastate their business.
You touched on the dollar, like, it costs a few dollars, and I think we got a question in that's really much it's on that topic. What is the range of costs if a company's looking to insure these trade receivables?
So our multi-buyer policy, small business multi-buyer policy, has what I call a global rate. So regardless of where you're exporting to, the rate is the same. So, and a 10 or 1 to 60-day term is 55 basis points. So if you have a $10,000 shipment, it's going to cost you $55 to insure it. There's no deductible. It covers 95% of that invoice. So you're in pretty good shape spending $55.
And on the insurance, again, another question that's come in is, if a company's looking and they're able to, through you, procure insurance on their receivables through EXIM, can that also be used as collateral for the EXIM back line of credit? And I think I know the answer here, but then a follow-up on top of that is, if a company also it procures insurance through you on their trade receivables, can they leverage that through a more traditional line of credit?
Yes and yes. So, and that's someone that really put everything together from, I think, today's talk. When you have an insured foreign AR, that becomes an asset that the bank, with or without an XM guarantee, is interested in advancing on. The key difference is how much that lender will advance on that given receivable. With an XM guarantee, they can advance at a higher rate than they can without an XM guarantee.
I appreciate that. Again, I appreciate all your time. Rich, I think this was it's great to get really into the weeds on some of this stuff, to have you on here. Maybe, I'll go to Neven, and then I'll go to Lou just for some potential last comments. So, Neven first, any sort of, conclusion comments that you'd like to provide, from the bank perspective, how we look at these programs, just a few words of wisdom for the folks on the line.
I would just say, talk to us. Talk to your banker, talk to your EXIM rep. I have a great experience working with EXIM. Again, going back to the stigma of working with the government, very responsive, well, richer than the folks that are the folks that are kind of trying to spread the word about EXIM, and the folks who sit in Washington, D.C. and help us underwrite those things. Very responsive as well. So talk to us. If you have an idea, if you have a question, reach out. There are between EXIM and the SBA, there are programs that you may not necessarily know about that may be there to help you if you plan to export. So that's really kind of the message that I would like to drive.
I appreciate that. And Lou, again, appreciate you joining on this. It's not every day that we get to display and put in front of everyone a client that, that is working with the bank, working with all parties, really. So it's been great to get your perception of the program and the value it's provided. But any sort of lasting words you would give to the audience here?
Yeah, so we've been relying on these programs for a long time, and we experience exactly what Rich was saying a few minutes ago. Being able to take advantage of EXIM's loan guarantee program, we've been able to compete successfully for international projects, which we would otherwise not have been able to take on. And we've been able to pursue larger projects, knowing that we would have the working capital we need to support them. And we've been able to very successfully grow our international business. Our international business was close to 70% of total sales pre-pandemic, and I'm sure we'll get back to that level.
That's good. And yeah, we hopefully you're there too. One last question came in, so I want to make sure we address it. Do you have to be a U.S. based company to seek benefits from EXIM Bank? Rich, I'll pass that to you.
Yeah, we support U.S. businesses with this program. However, it's a difficult question because you can benefit from EXIM programs if you are a foreign buyer. So through our medium-term loan guarantee programs. So depending on what you are what you're doing as a foreign company, if you're buying U.S. products, absolutely you can benefit from them.
Okay. Thanks. Again, I appreciate everyone's time here. I hope this was helpful for the audience. It's good to get every perspective. Sometimes we join these or we take part in these panels, and it's folks from the same either business line. They all do the same thing. So, I really appreciate the fact that we could get three people from different kind of worlds on this call, and we all kind of collide on one another with respect to a transaction here, which makes it a little more special too. So I just wanted to say thanks to Lou, to Rich, to you, Neven, and appreciate this being set up. So Melissa, I bring it back to you. I'm not sure if there's any other questions that have come through.
No, thanks so much, Rob. We covered all the questions that came in. Certainly, I'll encourage folks on the line, if you do have additional questions, you can reach out to myself or to Rich Foy at EXIM or to the folks from Santander, and we can help you out. But again, to reiterate your comments, Rob, thank you all to all of our panelists for a really useful and practical discussion for folks on the line. So thank you all again, and we'll be sending out the recording in the next couple of days. Any last comments from you, Rob?
No, that was it. I once again just appreciate the folks on the line that joined to spend an hour of their day with us. And again, I appreciate the panel here. I thought it was a great dialogue. I appreciated being part of it too. So it's I think this was a helpful dialogue, helpful for me as well to get everyone's perspective on this. So thanks again.
Great. Thank you, everyone.
Yeah, thanks everyone.